Hey guys, what is going on? Welcome back to my Robinhood portfolio. As always, hope you guys had an awesome day trading today. It's been a little bit difficult to really say that over the last week or so. As you guys know, S&P 500 has been in a little bit of a funk, trending down now for the ninth consecutive day, ending in the red. This represents really one of the longest losing streaks in the market's history, and the longest losing streak dating back to 1980 or so. So 35, 36 years that we really haven't seen a streak like this. However, it's also notable that the S&P 500, while it's been trending down for 9 consecutive days, it's only trended down overall about 2 to 3%, which is quite notable in itself. Prior downtrends that even came close to this particular 9-day streak would represent 4, 5, up to 9, 10% of the market. So this is quite unique in a couple different aspects. Overall, as well, the other major indices were down. So like I said, the S&P 500 was in the red, finished 0.17% down. The NASDAQ was down 0.24%, and the Dow 30 was down 42 points at 0.24%. My portfolio here, a little bit opposite the major indices. I was up $48.03 during business hours, after hours trading, down a little bit there, 11.50. So overall, 0.25% of my portfolio in the green. As I scroll through my different market sectors and my securities here, you can see kind of a mixed day for my particular portfolio. A lot of green, a lot of red, about 50-50 or so. No one stock performing exceptional today. My stocks that have a large portion of my capital here. Ford really didn't do much today. You can see there, total return negative 12.44, 0.16%. But I have, $7,000 or so in equity, so not a huge change there. And my other strong, or at least capital-heavy sector is the pharmaceuticals. You can see Pfizer here, ending in the green, but really just barely, 0.05% up. $1 out of 1,500. My Portola Pharmaceuticals here has been hit very hard over the last week in this downtrend. It's actually ended up $60.39, 2.55%. So that's essentially accounting for my market gains today. And my Abbott Laboratories here, up $2.88, 1.68%. But total equity value is only $156.40, so not a lot there. So what I wanted to talk about today was this idea of hedging your portfolio. So I had a few discussions with some viewers on exactly why I'm not hedging my account, and one of the strategies for doing this was picking inverse ETFs. So essentially trying to pick a market index that is inversely correlated with your portfolio, or at least with the way the market's trending. As you guys know, I have a majority of my stocks S&P 500, Dividend aristocrats, large cap, blue chip companies, and a lot of these have been trending down with the market. So one idea to hedge would be to try and cash out of some of those investments that have not been performing well, and taking that equity and buying things that would essentially hedge the market, or as the market trends down, they trend up. One of the ETFs that was suggested to me was this UVXY. You can see that up on top there, ProShares. It's essentially an ultra short ETF. It's leverage. So essentially, as the market goes down, this particular weighted index would go up. You can see over here, it's actually performed very nicely over the past week, which you would expect with the 9 consecutive days of the S&P 500 ending in the red. You can see 29.96%. Last month, 30.2%. As you would expect, over the last 5 years, the market has been extremely strong. You can see here, this is quite remarkable actually. The first time I've ever seen this in a particular stock. Its 5-year return is negative 100%, and it's only down 1,199,000 and change. So, if you've been holding on to this since 2011 or so, you have some problems. So, not to be too facetious there, but a very interesting way to leverage the market. Not Not exactly sure how that timing would take place. There's this talk about this CBOE volatility index. It's really considered, I guess, a gauge for market fear, sort of a fear index. That's actually been up quite a bit here. I think it's been up over 40% over this past week. So the U.S. presidential election between Hillary Clinton and Donald Trump is definitely affecting the markets here. There are a variety of different indexes out there, but the VIX, or this volatility index, seems to be the one that has been cited most in my discussions so far. Again, I'm a new investor. I don't know too much about that index, but suffice it to say, it's a gauge of market fear and can be a possible threshold or a way of gauging momentum in the market and trying to decide whether shorting the market is a good idea or not. At least that's what I understand from it. If I said that incorrectly, if somebody has a little bit more information about that, can explain that in a little bit greater detail, I would enjoy that opportunity to have that discussion. But from what I understand, a number of different ways of shorting the market, essentially hedging any downtrends in the market overall. So I really haven't done that this past week. It's probably a little bit too late to get into that, although we still have, if there's no holiday trading session on Tuesday, we still have 2 days here, Monday the 7th, and then the election's going to be occurring on the 8th, but not until after market closes. Or throughout the day, but the final results won't be in until the market's closed. So, probably too late to do that. I'm just going to hold steady, as I said in my prior videos. I had some positions here which I did not get out of. Really need to learn how to get out of some losing positions in a more timely fashion, but I'm going to hold my positions. Like I said, I've been holding off on buying any more stocks or securities, building up some cash on the sidelines. And I may, on Monday, if the market does do another downtrend, I might go ahead and dollar cost average some of my current positions. And there's quite a few stocks I want to buy as well, so I might do that on Monday, depending on what the market does. I think it's probably going to either hold steady or again trend down a bit because of all this market fear of possible Trump, a successful Trump election here. I don't think that's going to happen. I think Hillary Clinton's going to win, and I think the market's going to stabilize and recover somewhat after she becomes president. But having said that, I can't prognosticate the future. Anything's possible. It's a pretty tight election, so kind of wait and see. But yeah, I just wanted to talk a little bit about how my portfolio did again today, as well as really this unprecedented run within the S&P 500, at least a run we haven't seen for 35, 36 years. And this whole idea of trying to hedge, provide a little bit of an insurance, incomplete insurance, but a little bit of an insurance against the market continuing to downtrend here. So hope you guys enjoyed the video. If there's anything in the video that I said incorrectly, let me know. If anybody has a little bit more detail about this CBOE volatility index, VIX, and how that is really a marker for whether to hedge or not, to let me know. I'm not too familiar with that particular index, to be quite honest, but yeah, hope you enjoyed the video. As always, feel free to share, like, and subscribe if you're not a subscriber. I'm all about learning about the markets. I'm a new neophyte investor here. I don't have a lot of experience in the markets, but always looking for advice and things to read up on. So if there's anything that you've noted from the video, let me know. So yeah, the markets are continuing to trend down. Hopefully on Monday we'll have a little bit better idea where the markets are going. And until then, we'll see you guys later.